Hey guys, JC Parets here of allstarcharts.com. Shout out StockCharts TV for having me on. We're doing it once a week. Now we're going to be doing this once a month where we can really dive into what's happening in the market. And today I want to talk about commodities. I think that's something, it's an area when I talk to investors around the world, they simply just don't have a lot of exposure in commodities. I know there's a lot of like home country bias in the United States. That's going to be a lot of growth, and technology is a huge percentage of the economy here, particularly the major indexes. But you look around the world, you're going to get much more exposure to commodities. And the people with the home country bias in those countries have suffered the consequences of not being in some of these US tech stocks. But on the flip side, those that have been, overly concentrated in the United States, particularly in tech, have actually been rewarded handsomely, right, by staying away from commodities. But I think that that's where the opportunity lies. And we've been talking about this since last year when we felt as though the beginning of the new commodities supercycle was here, especially with crude oil trading below zero. Can you think of a better catalyst? So let's get into it. First of all, I want to just show you quickly here the returns of some of the major asset classes, and you can really see commodities really standing out so far this year, right? You can also see real estate doing very well, right? But commodities are the big winners so far for 2021, and you can see the CRB Index making new 6-year highs for the CRB Commodities Index. So I think that's very, very impressive. I think it's something we can't ignore. We've been talking about this 200 level in the CRB Index. Those were the highs in the late 90s and 2000, where we ultimately broke out to start that last commodity super cycle. And then obviously it peaked when crude oil was, $150 a barrel or whatever the case may be. That ultimately crashed, recovered, and then just continued lower. And we've just had a 10-year long bear market in commodities that I believe are more really, since last year, our thesis was that it was over. And all we have continued to see is just further evidence of that, right? Here's your multi-year highs in the CRB Index. These are monthly charts. So nice little base, breaking out of a downtrend line. So a lot of things going on there. And I think it's important to remember what's inside of the CRB Commodities Index, right? You got a ton of energy. Over 30% of this is energy. Over 20% is in the agricultural space. Very little precious metals. Probably why the commodities index is doing so well, because it doesn't have many precious metals in it, which are basically, precious metals are really the only space that hasn't been participating. I mean, commodities have absolutely been ripping. And then maybe it's because gold is not a commodity. Maybe it's more of a currency sort of situation, right? I've heard arguments in the past. Gold's not a commodity, it's a currency. Fine. And then, silver's an industrial metal, not a precious metal. Well, it sure as hell trades like a precious metal, and that's all we're into. So you could tell yourself any story you want that's going to help you sleep at night about how silver's an industrial metal, but it doesn't matter what you think. It only matters what the market thinks, and it looks just as shitty as gold. And they're just two of the worst commodities in the entire CRB index, right? So I think it's important to remember and recognize where the relative strength is. It's been in the base metals, which we'll talk about in a minute. And if you've been in these precious metals over the last year, man, there have been, I can't think of a worse trade to have been in over the last year than precious metals. I think that is the worst asset class over the last 52 weeks. So if you've been in that, it's because you've been purposely ignoring trends. And we don't want to do that, obviously. We want to respect trends because trends tend to continue in that direction rather than reversing. Let's take a look. All right, so here's that CRB index component again. And now we're looking at the ratio between the S&P 500 and the CRB index. So this is stocks versus commodities. And this particular ratio is down near 18-month lows. So we're talking about the S&P 500. While it might be making new highs on an absolute basis, relative to commodities, it's down near 18-month lows, which is further evidence that this potential beginning of a new commodity super cycle is still intact, right? That thesis is still intact, and crude oil trading below zero. Can you think of a better catalyst to get that going? I have a hard time doing so. So new recovery highs for the CRB index, crude oil being the largest component, also hitting new highs but it's not quite that simple. Here's crude oil hitting our $76 target, right? So we hit our target from the 2018 highs, and now it's just a wait and see game. So we have a floor of 66 and a ceiling of 76. While it's in that box, there's really nothing to do. So if you like getting chopped around and whipped around in trades, oil's probably for you. Me personally, not so much. I like being in clean trades. You know, when oil was up here, we liked it. When oil broke out above 66, we liked it. But stuck in between 66 and 76, there's just nothing to do here. Ultimately, I do think the crude oil breaks out. And I think we go to 100. I really do think that. The problem is that it's not so much a problem, but the caveat is that I don't know when that's going to happen. It could be tomorrow. It could be a few months from now. It could be next year. It could be never. I don't know. My suspicion is it does happen, and I think it probably happens this fall. You know, that's just a guess. But yeah, this fall, that would make the most sense. I guess we'll see. And we'll be patient, right? I'm 39 years old. I ain't going anywhere, right? We got plenty of time for this thing to break out, and we will be happy to buy it above 76. But below that, I think we want to leave it alone. By the way, this is this the right? Sorry, guys. Here we go. So this is the, So this is the password. If you want the slides, email info@allstarcharts.com. Make sure to use the password Commodities Bull Market. So that's the password, Commodities Bull Market. If you want the slides, Commodities Bull Market. Let me just delete that. There we go. Commodities Bull Market, info@allstarcharts.com if you're interested in the slides. All right. So now let's take a look at the stocks themselves in energy, the leadership group. We can argue natural gas, but on the oil and gas side, it's definitely been in the explorers and the producers, not so much the oil services, not so much the integrated. It's really the explorers and producers are the leaders. And what I'm seeing here is support from 2009, support once again 2016, then we broke in 2019, and now we're back to the scene of the crime. So for me, I think it's going to take some time. I think you're likely to see crude oil breaking out above 76, and the oil and gas ETF breaking out and holding that and sticking the landing, if you will. I think that probably happens simultaneously. So let's be patient and keep an eye out on the explorers and producers because those have been the leaders there. Turning our attention to base metals, this has really been what has your attention. I mean, listen, if you're not paying attention to what's happening in base metals, are you not looking at trends? And even with the weakness in emerging markets, particularly in Latin America, and we're seeing this resiliency and this amazing strength in base metals, I wouldn't have expected that, right? I figured once copper got back up to those highs, let's take a look at that. I figured once copper got back up to those former highs, it was going to be trouble. And sure enough, it has been trouble. But base metals have been consolidating through time. And in many cases, which we're going to look at now, like aluminum and steel, they haven't consolidated at all. So I think that's really, really impressive. And again, especially in the face of an environment that Latin America is doing poorly, you would think that copper would be struggling, and it is not. It's just hanging out there. So the highs 10 years ago was just below 4.5. The highs last month, once again, right around 4.5. So if we're able to break out above those levels, I think that would be huge because this is what this looks like. We're looking at a 15-year base in copper. When you overlay the CRB index, boy, they look awfully familiar, don't they? They look awfully similar. See that? So there's copper up here, CRB Commodities Index. So if copper breaks out of this 15-year base, what do you think the CRB index is going to do? I'm thinking a lot higher. I'm thinking twice as high, as a matter of fact. So you want to talk about commodities bull market, we've come a long way. I mean, the CRB index essentially doubled off the lows. I think they can double again. So talk about potential upside. This is definitely an area we want to be watching. I mean, if you can find me a more obnoxious chart, if you could find me a more obnoxious chart than this, I'd give you kudos. But wow, just absolutely relentless strength in steel. So if you're going to be focusing on any areas within the base metal space or commodities in general, steel's got to be near the top of that list. Look at tin making new all-time highs, by the way, above those 2011 highs. So when we looked at copper before, look at it again, actually, we have the technology. When we were looking at copper before, what happened, right? We got up to those former highs, right? 2011 highs. We got back up there. And then we're just hanging out there now. So when we look at tin, we are now through those highs, right? Very, very impressive for tin. So here's a name, MLM, Martin Marietta. It's a building materials company, crushed stone, sand, gravel products, heavy stuff. So if we are above 350, I like this long. Below 350, leave it alone. Only above 350, right? Because that puts us above a key extension level. So below 350, leave it alone. Above 350, I like it long with a target up above 500. And then look at Vulcan. We're looking at 193. That's the level VMC. We're below that. About the same size company as MLM, but we're below 193. So as long as we're below 193, leave it alone. But we're definitely keeping a close eye on this. If we're able to break out above 193, we want to be buyers. But I think we want to be patient with this one and let it break out. So here's the Metals and Mining Index Fund, XME. 44 is the big level there. Those are the 2014 highs, right? So if we're above 44, really hard to be bearish, hard not to be bullish. And let's take a closer look here. Those are the 2014 highs here. That was support in May, right? We broke down in June. It was resistance in June and early July, and now we're back above 44. So if we're above 44, I think we can be long the XME. Below that, I think things get hairy. But above 44, you want to be long this space. It makes perfect sense to me. Certainly the Steel Index Fund, SLX, continues to impress. 56 bucks is the level there. If we're above 56, we want to be long the SLX with a target of 78, which takes us back to those 2011 highs. But higher highs, higher lows taking place there. And then here's another steel stock. This got to be one of the strongest steel stocks in the world. This is a mid-cap from Luxembourg. It's a steel company from Luxembourg above the 2009 highs, 2008 highs, right? 46 is the level there. So if we're above 46, we want to be long TX with a target of 71. Below 46, leave it alone. But this is an interesting one. Gives you a lot of global exposure to various steel products in Mexico, Argentina, Paraguay, Chile, Bolivia, Uruguay, Brazil, the US, Colombia, Guatemala, Costa, Honduras, El Salvador, and Nicaragua. So 46 bucks is the level there. If you want that global exposure out of this $9 billion steel stock from Luxembourg, we only want to do so if it's above 46. If it is not, then we don't want to own it. I think it's pretty much that simple. So if we're going to talk about base metals, we're going to talk about copper, we're going to have this conversation. I think we need to bring up Freeport. It's hanging around near this 38.5 level. Below that, I think you leave it alone. Above 38.5, if you want to be long with a target of 60, that makes sense to me. Below 38.5, and you cannot own it. Cannot own it if it's below 38.5. Only above it with a target of 60. Look at Rio near 92. That's a big level. That's the 61.8% retracement of the entire decline, right? That 08 crash. Here's a 61. It took all this time just to get back up there and retrace only 61.8% to show you how what the struggle has been real in that space. No pun intended. That was pretty funny, actually. If those of you who get that joke. The struggle has been real, all right? See what I did there? All right. So 92 bucks. If we're below that, leave it alone. Above that, and I think a long position makes sense. Be patient. Below 92, it's a mess. And I think we get back up to those former highs, right? All right, so look at lithium. So lithium, part of the whole, they're considered chemicals, right? So materials, lithium, chemicals, like it's all that space. And the lit has been off the charts, right? It's really been lit, as the kids say these days, on the lithium. So 68 has been our level there. As long as we're above that, stay long and strong. We're about halfway to our target near 100. And then here's the largest component, Albemarle, ALB. So 156, 157, that has been our level. 243 is next, and we're about halfway there. So these two look similar. A lot of exposure there. All right, so then this is the worst of the bunch. Gold, just an absolute mess. Gold hit our 2011 targets, right? Those are the 2011 highs. We hit that last August, and it was time to feed the ducks, right? It's like, here you go. Now it's somebody else's problem. My thought process at the time was, okay, I don't know. The thesis was gold's ultimately going to break out, right? It still is the thesis. The question last August was, how long is it going to take? Is it going to take a few weeks, a few months, a few quarters, a few years? Maybe it never breaks out, right? So far, it's been a year. Still not breaking out, still struggling, and arguably, check my math, I think the worst performing commodity on planet Earth over the last year. Check my math, but it's got to be pretty close. because they're all going up except this one. And then here it is zooming out. So look at this multi-year base at the turn of the century in the late 90s, early 2000s. Beautiful base breakout, solid uptrend. We hit those highs in 2011, and for a decade, we've been doing nothing, right? So just think about all the gold bugs over the last 10 years that have been telling you to buy gold, and they've been wrong, right? They've been so wrong. It's been a terrible trade. But, because they thought this whole time that we were in this trend, right? But all you have to do is open your eyes to see that this ain't that, right? So ultimately, I do think we break out. I don't know how long it's going to take. Patience over the last year has been handsomely rewarded. I mean, if you've owned gold over other things, I mean, that was a terrible, terrible decision, right? Whoever told you to do that didn't give you good advice, right? The bottom line is we want to identify trends. And in this case, this is not an uptrend. This is an uptrend. If we are taking out those former highs, then we can be long. Call it 1920, call it 2000. It's really a messy range. But when we break out, you'll know it. You'll see it, right? And the gold bugs will make sure to tell you. They got nothing else to do. They'll tell you how great gold is, and you'll see it on the Twitter and, all those old gold bugs from 10, 13, 14 years ago. As long as they're not bankrupt by now, they'll be out in full force again. You'll know. And right now, that's just not what's happening. So I think we can be patient and wait for that breakout. Look at gold miners stuck in this range, 31 to 45, right? 31 as the floor, 35 as the ceiling, right? So as long as we're above 31, if you have a longer term look on gold miners and you want to be long, that's fine. Speaking more tactically, this is stuck in a box, right? So this is a good environment to be selling premium. People who are voluntarily getting chopped up in this mess are giving donations to the market, right? Particularly in the options market. So if you're selling premium, you're essentially accepting those donations. And people love giving donations. So if you want to take those donations by selling premium, man, if you want to talk about the trades that have been working out the best for us this year, I shouldn't say maybe the best, but up there in terms of our best strategies for the majority of this year, selling premium, right? People are getting chopped up. They're giving donations. It's up to us as market participants to take them. And this is a good example of that, right? So the gold, the GLD fund has never been worth less relative to the NASDAQ 100, all-time lows. This is the lowest it has ever been in history relative to QQQ, right? So anybody who has been buying gold instead of the NASDAQ over the last 10 years has been incredibly foolish, right? So all of those like conspiracy theories about like inflation or deflation or money printing, like all that stuff was either wrong or a lie, right? Because price has done the exact opposite and just been, the worst trade in the world, particularly over the last year. And here we are, new all-time lows for GLD relative to the NASDAQ 100. So looking a little deeper at some of the components of the precious metal space, this is Wheaton Precious Metals, WPM, looks a lot like GDX, right? So as long as we're above all these former highs, right around 40. For GDX, it's 31 is the equivalent level, but that's the level. So if you want to look for the names that are showing relative strength, this is one of them. So one to certainly keep on your list. Silver stuck below all this former support, right? All that former support. Let's zoom in here. So here's your former support from 2011, 2012. Then we broke in 2013. And now it took us all this time to get back to the scene of the crime. And it's really been a chop fest. So this was support overwhelming, demand, right? Demand overwhelming supply. There were more buyers than sellers until that dried up and it broke. So what do we know when it broke? That there was more supply than demand. And that's exactly what we've seen 10 years later as the market, or 9 years later, whatever it is, as the market is absorbing all of that supply. And it is taking quite some time. It is taking its nice, sweet time. And we are in no rush. By the way, here's another one, looking at the details of the precious metal space. Just look at, or the components, I should say, just look at this major base. Cisco Gold royalties, OR, pushing up against all-time highs. For me, that's interesting, right? We're able to break out above those levels, 14.5 or so, and we take out all those former highs. We want to be long. Now, I don't know when that's going to happen. Patience has been, like I said, handsomely rewarded in the precious metal space. So the big question becomes, how long is it going to take to break out? I don't know. I have all the patience in the world, and I'll be happy to buy it upon that breakout. All right, so look at the looking at agriculture. These are the stocks, the companies themselves in the business of agriculture, not necessarily the commodities themselves. And here we are hitting our upside target near 95, right? So this would be a logical area to find some trouble. If we were to exceed this 95 level and break out, I think a new leg higher can get going. But coming out of this, decade-long base, we just literally ripped right to that first extension target, the 161.8% extension of the whole base. So the question becomes, how long do we take to break out above 95 and extend to 261? How long is that going to take? I don't know. But the relative strength remains. So within the agricultural commodities themselves, cotton, how does it not stand out? Right? We've seen a lot of strength out of wheat and coffee. What about cotton? If we're above 98, we want to be long cotton with a target up near 140. 98 is the level there. If we're above 98, we want to be long cotton with a target up near just below 140. So here's a material stock, $33 billion agricultural inputs stock. The name of the company is Nutrien, NTR. We want to be long only if we're above 59. If we are below 59, then we do not want to be long. So only long above 59, that puts us above the 2018 highs. Below that, leave it alone. Above 59, we want to be long with a target of 80. And then, the whole DuPont, Dow Chemical merger, spinoff, all that whole, not disaster. I mean, it is what it is. It's just messy. And especially when it comes to math. And when they did all that, we had an options trade on. So talk about just complicated. So I'm a little bit bitter about the whole thing, but that's just, it is what it is, right? Cost of doing business. So anyway, that was a few years ago. I'm still bitter about it because it was so confusing on the options math. But anyway, this is what the new ticker that spun off. Here we are a couple of years later, right at those levels. So 60, 61, those are the levels. If we're above that, want to be long Dow, DOW, that works for me. Below 60, you can't touch it. So below 60, you can't touch it. Above 60, 61, I like it long with a target up near 84.5. Look at Lind, LIN. This is a big one. It's a $150 billion specialty chemicals company. 269 is the level there. Below 269, leave it alone. We want nothing to do with it. But above 269, I like it long with a target up near 400. And then just taking a look at chemicals on their own. This is what it looks like to me, right? So about halfway to its target, just under 1,000, right? So there's nothing actionable here, right? The buy was when it broke out back here, which obviously we're all over that. If you guys know me, coming out of a beautiful base like this, of course, JC and the team were all over that because that's exactly what we're looking for, and we're about halfway to our target now. All right. And then finally, I know I mentioned that I wanted to focus more on commodities today. We could argue back and forth whether gold is a commodity or a currency. I think the buyers and sellers are proving maybe it's more of a currency than a commodity because literally every other commodity other than gold is working. But anyway, whether we're looking at commodities, whether we're looking at currencies, we're not just looking at them on an absolute basis. We're looking at it on a relative basis, right? And it's almost like specifically I guess you can make the same argument for commodities and Bitcoin. In the case of commodities, in my estimation, based on the data that I have, based on the conversations that I have, based on the components of the major indexes in the United States that have no materials or energy, or any of these things, in my estimation, the squeeze is on in the commodity space. I think that investors are very much underexposed to commodities, allowing the recency bias to deprive them of the gains in commodities. So in my opinion, if you are not long commodities, you're leaving so much alpha on the table that you're essentially short commodities. If you're not long the space, you're short, right? I'm going to tell you the exact same thing about Bitcoin. So this is Bitcoin relative to the S&P 500 running into that high in 2018. Consolidated, digested those gains for several years as S&Ps did well. We broke out on a relative basis earlier this year and came back and retested that level. That level is 7. If we are above 7 in the ratio between Bitcoin and the S&P 500 and you are not long crypto in one way or another, maybe not necessarily Bitcoin, but the space, you are short. You are short. And I'm going to tell you something, just to be clear. Like, I'm not one of these laser eye, diamond hands, tweet out every time Bitcoin makes a new highs. I'm not one of these losers, right? That's not what we're here for. I don't care. Doesn't matter to me at all. Bitcoin can go to 0. Bitcoin can go to 1 million. It doesn't matter to me at all. I'm not like the founder of Ethereum where like my life depends on cryptocurrencies sticking around. They can all go to 0. It's not going to change my life. Doesn't matter to me one bit. So when I tell you that if the Bitcoin S&P 500 ratio is above those 2018 highs, specifically 7.0, if we're above that and you don't have long exposure in the crypto space, in my humble opinion, you are essentially short cryptocurrencies. I don't want to be short cryptocurrencies, not with these major multi-year bases that are resolving higher. I do not want to be short cryptos. I do not want to be short commodities. Those seem to be areas that are squeezing, particularly relative to the stock market and especially relative to the US stock market that has virtually no commodity exposure and obviously almost no crypto exposure. I mean, if you want to add a couple of the stocks that have a little crypto exposure, a few ETFs, fine. But we can all agree the US stock market has virtually no exposure to commodities, virtually no exposure to cryptocurrencies. So it's up to us as investors to make sure that those asset classes are included in our portfolios. And by the way, you're welcome to disagree with me, right? If you want to cherry pick, whatever low in gold that supposedly you bought it at and all that stuff, great, right? I'm more in the business of zooming out and looking at things on a relative basis, and gold is still below those 2011 highs. When it breaks out above that, I'm going to be Mr. Gold Bug, right? All the gold bugs are going to love me again. I get invited to Vancouver for the Gold Bugs conferences, and I'm like part of the family, right? When I'm not, now I'm just a terrible person, right? So for me, I'm good. I'm used to it. I've been at this for a couple of decades now. I know the way the cycles work. And by the way, when you see those gold bugs that are including me as part of their family and inviting me to all those conferences, you'll probably know that gold is in an uptrend, right? You'll be hearing me talking about it. We'll be long silver, I'm sure. A bunch of these gold mining stocks, GDX, et cetera, et cetera. In the case of Bitcoin, listen, if we're above 30,000 on an absolute basis, I think we have to be long, right? And especially if the Bitcoin versus S&P 500 ratio is above 7.0. And if we're above 7, you're not long. I think you're short. And you getting squeezed is good for us that are long the space. So, just to circle back, what areas are shining in commodities? I think some of the agricultural stuff is working. The base metals, certainly. Man, it's really impressive. The steel, iron ore, rebar futures. Take a look at all of them, especially with lumber getting slaughtered. Lumber lost 70%. And, if you would have asked me, hey, JC, lumber just lost 70%. What do you think base metals are doing? I would have said they're probably not doing very well, especially if you would have shown me what Latin American stocks are doing. I would have said, yeah, base metals are probably getting hit. Well, guess what? They're not. And I think that's information. I think it's information that we can't ignore. So we want to be focused on base metals. We want to look at that CRB index above 200. If the CRB index is above 200, I can't make a bearish argument. I'm happy to if we're below 200, but until then, I can't. I think you got to be long the space, and we're going to look for a breakout in oil above 76. My suspicion is it's probably not going to happen tomorrow or next week. I think we got a little bit of time, but we want to be buyers above oil. In oil, if it's above 76, I think it goes to 100. So a lot of opportunities in the commodity space, a lot of opportunities in the Bitcoin space. Let me just one more time. If you're interested in the slides, my friends, email info@allstarcharts.com. Make sure to use the password commodities bull market. Thanks, everybody.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.